Shahina Mukadam is now with us. Good afternoon, Shahina. Thank you so much for taking out time for us. First, a quick view. A few Rajcap results companies coming in. Reliance, nothing looking that great.
Well, Reliance had a very good set of numbers, and I do agree with you. The rest of, like for example, HCL Tech, but it was more or less expected the numbers would disappoint. Of course, they were worse than expected, but it looks like the stock is bottoming out. I think it's been a mixed bag today. We saw a good opening and then we're not really able to sustain those higher levels. But I think we still have got a good support in the market, and we are, in my view, moving towards the 8,400 levels.
Right, 8,400, which means just about 150 rupees in terms of upside.
Yeah.
That's essentially what you're looking at.
Yeah, because I think at those levels we may see a bit of resistance again coming in, and then we would have to sort of wait for the other big numbers, but we're not getting too much support from the banking stocks. The expectation was if the banking stocks had given a good support, which was sort of likely, in the morning, but it's not really panning out like that. So
right,
I think
Shahina, just stay on with us. Group Finance has declared numbers, a 3-4 crore miss, 52 crores versus about expectation of 55.8 total income. Looking indecent, 312 crores. It was estimated to grow quite well, but initial reaction, just a positive tick coming in. It's not a very big volume counter that would give you an immediate cue. But we'll wait and watch. We'll be talking to the management soon on these numbers. Numbers are broadly looking in line, a 4-5 crore miss here and there. I don't think it'll change the estimates too much. Shahina, you were talking about Reliance, the sustainability of numbers. Can you just tell us about the 6,500 crore PAT that they did? If sustainable, it could be a very big wealth creator even from here on.
Yeah, absolutely. But the issue is that the GRMs were much higher than were estimated, and whether they would be able to, and that was the main reason why they were able to report those sort of numbers. So whether they would be able to sustain it over the next couple of quarters, that is the issue, especially now with oil prices moving up slightly. Secondly, I think there is a bit of resistance that comes in for Reliance at, say, the 1-year 52-week high is about 100 rupees higher from here. So to that extent, there is an upside. I would think so, but the upside is limited to about less than 10%, 5 to 7%.
You think the big delta in Reliance would only come in from telecom? I mean, how does the telecom vertical respond? What is the acceptance in terms of public, the profitability over there?
I think that would be a very important factor, because a lot of telecom stocks and the whole I mean, it's really being watched very closely. So if they do get a good response, and hearing the flows in terms of the hardware that they're talking, the support, the expansion that they're talking about in telecom, quick expansion investments, I think it would be a very important news development as to how they garner the market share and how much market share they garner.
But do you think that they would be able to do well? I mean, is the street expecting a lot to be done by them?
Well, I think the expectations run high, but one really needs to wait and watch, because the competition is also pretty strong. You have Airtel, you have Idea, which is they're really growing fast. So to that extent, I think there is going to be stiff competition.
Right. And about HCL Tech, the results that they declared and the reaction to that?
I think HCL Tech, the market was expecting a poor set of numbers, and they delivered poor set of numbers. In fact, slightly poorer than that also. But the $80 million, the impact may not be. I would say for the next quarter or so, maybe it could continue. But now with rupee dollar stabilizing, the currency impact at least, and the specific client impact at least over the next 2 to 3 quarters should even out. So I think at current levels, in my view, it becomes a buy. I think the stock has got in the next 1 odd year an upside of about 150 rupees. We are already seeing the stock bottoming out, and I think it's got about a 1,000 rupee target over the next 1.5 years. So it could be a pick at every decline or even at current levels.
Right, even at current levels, you are fine with the valuation because of the recent cuts as well as the PE derating that we've seen for HCL Tech?
Yeah, and it has been, the derating has been happening for some time, immediately after they announced that they would be impacted, numbers would be impacted. The correction has happened, and I feel now we'd see some stabilization. Of course, the other stocks also like Infosys and NIT Tech, if one is to look at the basket of tech stocks. But I think HCL Tech would be a stock to look at for a medium to longer term.
Right. Do you think that HCL Tech does deserve a premium multiple than what it has been? I mean, third straight quarter of earnings decline. Outlook, okay, was great. But do you think that it deserves to be among the top tier in terms of the multiples that it has been getting?
Yeah, you know what, the correction has happened, and there's a lot of negative news that was there, which we've been hearing for some time now, and which has kept the stock, I would say, soft. So in my view, given the fact that there is, a business improvement likely, margins are likely to be sustained. So the impact of the currency headwinds and that single client issues, once that is sorted out, I think, again, the valuations will look much better.
Right. What would, you make of TCS and Infosys that declared numbers? Were they decent? Do you think HCL is better than the other top two players?
I would prefer, if you have to actually make me choose, I would still prefer an Infosys, because I think the numbers were great and outlook remains good. They seem to be very well positioned to capture on the digital change that's happening. So, and margins expanding, growth coming back. So I think everything looks good. Stock has corrected, valuations are decent. TCS, I would, if I was to prefer between the two, I would still stick to Infosys for some more time, because TCS is still slightly more expensive on a 1 year forward basis. But TCS is remaining flat. Maybe after some consolidation in a couple of months, one could look at it. But as of now, I would stick with Infosys between the two of them.
Right. How would, you look at some of the other players in the mid-cap space? Mindtree results were quite blockbuster. Tech Mahindra is yet to declare. You think even mid-cap IT is decently placed?
I think in mid-cap IT, one can look at Mindtree, because last quarter, they had come out with very poor results. Stock had corrected. Post that, now, we've seen good set. We've seen a, bounce back of sorts. Also, I think the business space in which Mindtree is likely to do decent. Also, I think Persistent Systems is another stock that one can look at in the mid-cap space. So I would sort of, stick to these two simply because the business prospects are good for these two going forward in terms of their ability to adapt to the newer technologies.
Right. Ultratech just declared numbers. Have you managed to look at them? Any sort of view on those numbers?
The number expectations, I've not looked at it closely, but we were expecting a very good set of numbers. So I don't think they've delivered 2% top line growth. I think the profit growth, sharp growth in profits. So, if you could run us through, that would be nice.
Right. So I'll just tell you the numbers. Okay. So as per the estimates, revenue numbers were slightly better. This wasn't because of better realizations. 5,620 odd crores. It was up 4% YOY, but versus estimates it was about 100 crore beat. The overall volume growth came in at 5%. Estimates were about 3.8%. EBITDA came in at 930 crores. This was versus an estimates of 950 odd crores. Higher power and fuel cost, that was the main reason for disappointment. It was slightly higher. PAT numbers came in at 390 crores. Estimates were about 400 odd crores. So broadly in line, but Shahina, what would be your view? It's still not a stellar number.
I think they're decent numbers, and you have to factor in. I'm positive on Ultratech with a 2-year view. You have to, if you look at the EBITDA level, going by what I hear, the numbers are good in terms of volume expansion, in terms of revenue expansion. My revenue expansion estimate was about 2%, so they've definitely done good. And both in terms of, I believe, volume as well as pricing, they would have taken a good increase. I think these stocks are taking a beating because of all this news that of cartelization, stories that cement companies have cartelized, they've taken sharp increase in prices in the last 2-3 months. So that is there, but I think that set aside, I would remain positive with Ultratech. On the PAT level, despite having this huge jump in terms of capacity expansion, which would increase depreciation interest costs, I think the company has reported a decent set of PAT. The company has invested something like 25,000 crores in the last 2 years, and that upside has to be reflected over the next 2-3 years. So
would you wait for a correction or start buying in parts?
Well, I'm positive for the overall market with a shorter term also, and if you take a 2-year view also. So I would be a buyer in parts. I mean, this market is not something that you want to rush in and buy, but Ultratech Cement, ACC, Ultratech, these two both, I think ACC is looking better technically on the shorter term basis, but if one is looking at a long term prospects, Ultratech is definitely something one can look at.
Shahina, what do you make of the Indigo IPO and especially the re-rating that we've seen in Jet and SpiceJet? You think that is something that markets had ignored, and now suddenly you're seeing a relief coming over there?
Yeah, I mean the Indigo IPO. If you see pricing, now it's still priced above Jet. So I think to that extent there has been a rally with the expectation that Indigo IPO is going to bring out the valuation of Jet and Spice, and it has. And I do think that it is going to attract a good amount of investor interest, considering the fact that oil is likely to remain on the lower side, and which is one of the important expenses. So to that extent, I think Indigo and Jet likely to do better. Spice is expensive a bit, but it's a turnaround. I think the sector should do well, no issues.
Right, but would you be buyer into this sector right now? I mean, into Spice or Jet Airways, or you would just wait for Indigo listing and then take a call?
I think all three stocks look good from an investor point of view. But if you're looking at a short-term investment, I think Jet still has some more upside from here. And I think at least till, for another couple of days. So if you're looking at very short-term, I think Jet looks the best bet now.
Right, but overall, how would you look at this Indigo raising funds? They are one of the top players with 30% plus market share. It should be negative for Jet and Spice, right? They are now even getting funds to go ahead and capture the space that probably these guys were doing well in.
Well, I think it was a better managed airline. So to that extent, and they managed to keep their costs low. I think they were very focused on their yields and their costs, which to some extent Jet and Spice may not have done, and they let their debt and they let it rule, they let it move ahead at a time when the airline industry was not doing well and oil prices were very, very high. So they did their expansions at wrong time. So to that extent, I would say Indigo has been better managed and it gets that premium over Jet. But with oil prices remaining low and yields improving across the board, as we've seen even for Spice, when we heard the management talk, he's so confident with the number of new craft that he's planning to order in the next 1 odd year, and no stress on the balance sheet. So, and that is if you look at among the three, seems to be the highest stress, balance sheet stress. So if that airline is talking of such a major turnaround in the next 2 years, so I think the sector should do well.
Right. Do you expect more listing? Go Airways, some of the other ones that have recently come in?
Well, I mean, they're talking about, but I don't know. I mean, it's difficult to say. But I think it would be negative, I mean, if we have so many coming in a short period of time, so I don't think that's going to happen immediately. That would be some way off.
Right. What's your view as far as Tata Motors is concerned? A spectacular rally since last we spoke. You think that more can be expected from that?
I think the stock has shown a good amount of bottoming out. In fact, what was really attractive, there are issues, there are issues with the company in terms of high debt, in terms of issues with China. But if the last numbers that we saw were pretty good, and if those sort of numbers are sustained, and if you match it with the valuations that the company is getting in terms of the overall auto space, especially four-wheelers, then I think absolutely, there's at least another $50 upside from here over the next 3 to 6 months. So it looks good, I mean, every dip should be taken as an opportunity to enter.
Right, but again, you don't need to be in a hurry to buy Tata Motors. You can wait and watch, because it's not that very, very attractive valuation.
No, I think it is attractive in terms of valuation if you compare it with a Maruti, I mean, with both are picks, both are buys. In fact, even Ashok Leyland is. So if you compare it with in the four-wheeler space, it is slightly cheaper. So one can still look at buying it.
Right, that was from the large cap space. In the mid cap space, you had earlier recommended Ashok Leyland to us.
Yeah.
Is that a name you still like? You would still want to continue with that call?
Yeah, I still would like to continue with the call. It's not cheap, anymore. But at the same time, being a turnaround case, I would still go with it. I would like to add one more stock to the two-wheelers in terms of, I mean, in the mid-cap space actually, TVS Motors. I think that is a stock to watch out for. In the last 6 months, it's given a good amount of correction. We've seen a good bounce, small bounce now, but I think the BMW tie-up, which is still to contribute to overall revenues and profitability, investments have been totally made of about 200 crores. Balance sheet is strong. So I think that's another one company that we need to watch out over the next 1 odd year.
Right. Ma'am, thank you so much for joining us here this afternoon. Always a pleasure talking to you.